I guess why don't you expand on the whole balloon thing on a wraparound mortgage?
Sure. Yeah. Owner occupant loans. Like, okay, home ownership is the American dream. Just think of it that way. And courts and legislators and laws are designed to protect the consumer. You and me, anybody watching this is probably considered a business in a real estate transaction. So you have a business versus a consumer. Courts favor consumers. When it comes to a balloon, there are both state and federal laws that restrict when you make a loan, you become a lender and you become subject to lending guidelines. And so you can't put a balloon at least less than 5 years, but generally you just shouldn't on an owner occupant buyer.
I would like to take a 10-minute break and then three, two, one. How do you have the ability to analyze stocks?
Welcome to the Generations of Wealth podcast. I am your host, Derek Dombeck, and today's show is so much damn fun. I can't tell you. Caleb, when I introduce you to him, you're going to see he's a title company owner, but he's a creative deal structurer. And so we're going to dive into a lot of different nuances with getting your creative deals through your title company or finding a title company that actually knows how to do creative deals and get them closed the right way. So before that, I always like to take a moment to tell you how much I appreciate you, let you know I'm here for you. If there's anything I can do to help you, if it's helping you structure your creative deals, or you're looking to invest some money or raise money or whatever it is, go to derekdombeck.com. You will see on there a spot where you can fill out a form and also schedule time to jump on a call with me. So derekdombeck.com, and I can't wait to work with you. Now, let's bring on our guest. And here he is, all the way from Kansas City, Kansas, not Missouri, Mr. Caleb Christopher. Thank you so much for being on the Generations of Wealth show.
It is an honor to be here. Thank you for having me.
We talked about the potholes on the Missouri side of Kansas
Oh,
City
yeah.
before we started recording here. So,
Yeah. Get that out of here.
yeah, if you're listening and you're from Missouri, we love you. But if you're in Kansas City, Missouri, go across the state line and have a conversation with Caleb. So, fair enough.
Yeah.
Caleb, why don't you tell the audience a little bit about yourself?
Well, where do you start? I read Rich Dad Poor Dad, right? Now I'm in real estate. Isn't that that's how everybody was conceived as a real estate investor? That's your conception story. So there's that. And then I got into creative finance because I started as a wholesaler, helping a wholesaler team like make offers. I don't like slinging cash offers. It doesn't feel good to me.
Mhm.
Some people are great at it. And really, I understand that you're helping people and the industry by moving real estate. It's just not where I like to be. But then I found creative finance and I'm like, oh, there's a story here. This person has to sell this way or they have these other problems. And I just like solving problems. When I was in IT, I liked I liked being the generalist. I can do anything.
Mhm.
And so when I got to creative finance in real estate, I was like, this is great. I get to hear people's stories. I love listening to stories and I get to build a custom solution that fits their needs. And so I started doing that. And then I was like, whoa, there's some bad actors out here. You can pretty much do somebody dirty either intentionally or unintentionally. And so I started a company to consult on creative deals to make them safe, legal, and ethical. And then generation two of the company is that I've actually switched to owning a title company. So that's where I'm at now. I own a title company in Colorado, in Tennessee, and I'm looking at buying in another state right now.
Well, and because you brought up title companies, and because I'm going to assume that you have your title companies because you couldn't find decent title companies to work the creative side, right?
That's part of it. Basically, I mean, I don't want to take too big of a soapbox, but a little bit and say, like, I know more than you. Like the Ron Swanson quote at the hardware store when people were, we would bring deals as consultants, we would bring deals to a title company, and then I'd have to train them on how to do the sub two deal the right way without tripping the lender. I don't know if you want to stop and explain anything, pull definitions from me anytime.
Well, I think we're going to get into a lot of discussions about creative deal structures and as well as the challenges with title companies.
Yeah.
But before that, like how long ago did you kind of get into real estate and the creative side?
2019 is when I became an accidental landlord. I got into creative in 2020.
Okay. Okay. So COVID hits, right? Creative, a lot of people are like, you can't do creative deals because the market is, houses are selling themselves. And I said, bullshit. I've done creative deals for decades, and it doesn't matter what kind of market you're in. What was your experience?
Oh, same thing. I mean, people still find a way to default. So, I mean, interest rates were at like low, low, low. And so people with no equity basically they would take a 5K payout. Like what I ended up telling people was, hey, your low interest more.
Well, enough people have been inquiring, and I'm going to make this super simple on all of you that are listening to the show. If you have any desire to work with me, whether that is a transaction that you're working on that you need help structuring, if you'd like to buy a deal that I have for sale, if you would like to sell me something, whether it's real estate or a business, happy to talk with you. Or if you want to be a financial partner in one of our real estate transactions, simply go to derekdombeck.com. On the homepage, there will be a tab and there will be a web form for you to fill out. Check the boxes that make the most sense for what you want to do, and you will get directed to schedule a call with me, and let's have a conversation. Let's see what we can do to work together. So look forward to hearing from you, no matter what it is that I can help you with. Again, go to derekdombeck.com, fill out the web form, schedule a call, and I will talk to you soon.
Mortgage is an asset that I want to buy. I will buy your mortgage. I will pay you 5,000 or 10,000 cash to walk away above the value of the home. You owe what it's worth, or not even that. But long term, in the 30-year picture, this is worth something to me, and I'll make sure it gets paid.
Absolutely. So single family is where you kind of started?
Yeah.
Okay. And what does that look like now? I know that we were talking a little bit about some landlording things before we started recording as well. Just, tenant issues, things of that nature.
Yeah.
But what are the pros and cons of single family, the way you're doing it? Are you holding them as rentals, or my preference is actually to put people in on lease options in properties that I buy creatively, but what does it look like for you?
Yeah, that makes sense. I mean, I teach in several mentorships as like just a guest, like the creative guy, guest speaker on like a weekly or monthly. And so I respect all the different strategies. The deal has to work for both sides, right? The seller has a story, you have to meet their needs. And then you can meet their needs by having a skill set and saying, this is how I can help you. If cash, realtor, and keeping it don't work, creative is the last option. Let's do it. I can help you. So I only own 4 rentals right now, and they are long-term rentals. My focus has been on building and maintaining service businesses for other people who are actively doing these deals. Once I joined a wholesaler team as a lead manager and saw the insides, I'm like, I'm going to be the change I want to see here and start putting things together. So I haven't actively bought much for quite a while.
Okay.
But I've helped structure plenty. I teach classes on how to structure wrap payments, the legalities, and things like that. By the way, I'm not an attorney, disclaimer, blah, blah, blah.
Yeah, exactly. Same thing with me.
There you go.
So I think that disclaimer should be just on every show that I do, because I just tell it the way I see it. And if you don't like it, don't listen to my show.
In fact, to your point there, I don't have a license in anything except to drive my car, because so far. Now, if I have to get one, I have to get one. But I own a title company and I'm not a licensed person. I have licensed people working for me because I like to say what I want to say.
Absolutely.
And I don't want somebody to be able to take my license away.
Absolutely. And the way I look at it, having a license is if you want that fiduciary responsibility, but I buy and sell on my own behalf. And so I don't need to be licensed where I do business.
Right.
And that doesn't mean we're doing it wrong by any means.
And I do more good I already know without a doubt that I do more good for the industry than most licensed people, probably the vast majority of licensed people do or can.
I think you put that exactly the way I would put it. Here's my biggest challenge. And if you're a realtor and you're listening to this show, God bless you, because you're listening to this show and you think differently. But the vast majority of realtors, and I'll go back to, I think it was 2021, there was more licensed agents in the country at that point than there was listed properties for the first time in history. And it's because there's such a low barrier to entry to get
Yeah.
licensed. And it doesn't mean they know anything about real estate, especially creative, problem solving real estate. So I agree with you 100%. We are,
Yeah. I think even at this point, like if I wanted to start a wholesale operation, which has never been my personal dream, either I or some of my people would be agents. Just depends on what state you're in, but it also opens up a lot of opportunities of how you can work and what you're allowed to do. And so there's benefits to having licensed people and unlicensed people. And if you can leverage both, then thumbs up from a business model standpoint.
yeah, and you still want those people on your team. I have incredible people
Yeah.
on my agent team, right? That people I love working with. They bring me deals. I sell my properties through them, whatever that looks like. There's got to be a piece of the pie for everybody, and that's
Yeah.
fantastic. But that is the 1 or 2% versus the 98% that, you know, people are panicking depending on what market you're in right now. There's agents that are starving because nothing is selling. Well, it's capitalism. We need up and down markets. We need a thinning of the herd, or all we have is inflation until nobody can afford anything. In my humble
Yeah.
opinion, that's not so humble.
Well, and I mean, I've got a syllabus that I'm working on getting approved for continuing education credits of creative finance for realtors, which is basically number one. Stage one is awareness. Stage two is how to interpret the offers or make offers. And stage three, I forget what that was, but basically you can be really competent. And that's a whole tool set that you've got at your disposal to be able to talk sellers through and be able to effectively interact with all these people slinging creative offers because I mean, you may be playing with fire and you don't know it. So some of the wiser agents are like, listen, if they say, here's my thing with agents, if they say, no, I'm not going to touch creative, I won't even listen to that, just because they want to stonewall it and they're not interested in learning, that's the attitude I don't like.
Mm-hmm.
If they say, I can't consider this offer right now because I don't have the capacity, the time, et cetera, and I'm aware that there are risks that I don't understand. It's beyond my capability set right now. We can't handle that one. That's a much more respectable position to me than
Oh, for sure. And we don't want to, I don't want to spend my entire day educating an agent or anybody, quite frankly, and teaching them something that they're not going to agree with, and they don't have
right.
to agree with it. But like my pet peeve has always been, okay, I pay an accountant. I pay an accountant because they know how to be an accountant. If I say to an accountant, I know that this is possible. I'm buying a property and I know that we can save the seller on their capital gains taxes. And here's what I believe can happen. Now you tell me how to do it. And if they say I don't know how, and I'm going to charge you $400 an hour to learn how, that's not the accountant I want to work with, or the attorney,
Right.
or fill in the blank. Right? I don't want to pay for their education. But if that same accountant says, you know what, let me look it up. I'm not charging you. I'm going to go find the code and come back to you. Great. That's a good accountant. One of my close friends and mentors years ago, he said, how do you find a good accountant? You ask them what 1 + 1 is. If they tell you 2, that's not a good accountant. If they say, what do you want 1 + 1 to be? That's the accountant that you want to work with because they're open to,
Yeah.
alternatives. And
Yeah. I mean, same thing with attorneys in real estate, particularly creative finance. It's like the reason I came to you was for you to help me get to my destiny. I have an end goal. You
mhm.
telling me I can't, I already know I can't do it the traditional way. I need you to tell me how, not you can't.
Yes.
I know I can. Help me figure out how.
So this whole show might just be us bitching about other professionals that aren't very
Yeah,
professional,
we're
and
gonna
that's
have to move
okay.
along.
But I got to ask this question. So when I'm helping a client, otherwise known as a seller, right?
Okay.
And they say, well, I want to have my attorney look at this. We both know that if we say no, the deal's dead, right? Because they're not going to believe us. They want a third party to validate what we're saying.
Yeah.
So we have to allow them to say that. Or I'm sorry, to go and review it. Nope, not a problem at all. But I always tell them, don't be surprised if your attorney or your accountant comes back and says you shouldn't do this, or you can't do this. And here's why. And I'll give them a couple examples.
Yeah.
But I've gotten on the phone with their attorney on conference calls, and this is a lot of fun for me, because they have years and years and years of education, and they don't understand what I'm proposing. And inevitably, they'll tell their client, you shouldn't do this. And I had a gentleman that, I mean, the deal was done. He just wanted his attorney to review it. We had a conference call. His attorney said, I cannot advise my client to do this. And I said, no problem, I'm out. 3 minutes after we hung up the phone, that seller called me. He said, I don't care what my accountant, or I'm sorry, what my attorney is saying. We're doing this deal. And the line that I've used, and you guys can all, utilize this with sellers, is your attorney giving you a solution to your problem, or just telling you to say no to mine? And that has turned around so many deals for me.
Dude, say that again.
Is your attorney giving you a solution to your problem, or just telling you to say no to mine?
Dude.
And you
End
can
of
use
show.
that with accountants as well, right?
Done. That's the end of the show. Perfect. Wrap it up.
Because
That
at the
was
end
huge.
of the day, they don't, yes, they're looking out for all the could happen possibilities, as they should. But if that seller is in default, losing their property, or 1,000 other things
Yeah.
that we solve creatively, and they don't have a solution for them, what are they doing? They're not helping.
They judge as if it was them. They're like, if it was me, I would never do this. Yeah, well, you're not in default for 6 months and have this and that and other things going on in your life, and a sick father and XYZ, and having this off your plate. Like, you don't know what it would feel like to have this off of your plate without facing a foreclosure, without having to come out of pocket with money you don't even have to sell it for less than it's worth on the market and pay for an agent, and you don't have time to clean it up. Like, let me stack the story on them and see if they actually would say, no, I would never do this. They're just not in the same position to make the same call. From a risk perspective, they're saying, I would never do this. Thumbs up. I get it. You would never do that. You're not in the same position. Given their circumstances, to your point, are you just telling them to say no to a risk in general and covering your own butt as well? Or are they helping you find a solution? Because what I brought was a solution. Now, how do you make me accountable for that solution, right? And
Right,
that's where we get into like the ethics of deals, like setting it up for a wrap. Like, I'm going to give them the right to foreclose on me if I don't make payments. That's the wraparound mortgage.
Yeah, and let's go to that scenario. Let's talk about wraps and land contracts, pros and cons, lease options, things like that. And then also, you as a title company owner, how do you handle that when it comes to you? So I guess
here's an interesting thing. Let me start with something interesting about title company, because I come from the consulting side. Like, I used to put deals together. I underwrite deals. I wrote an underwriting calculator and a course, and I published and sold that, gave it away inside of a community. Like, hundreds of people have said I use this thing every single day. Like, it's their favorite calculator. So I'm like, I've been in the weeds. Now that I've become a title company, my job is to be a neutral third party. And it kills me, because once you bring me the contract, if I'm working for the transaction for both parties, and I can't help you restructure your transaction. Like, hey, you should do this. I can't say that. If you talk to me beforehand, call me, email me. Hey, I'm thinking about doing a sub-2 deal in Colorado and XYZ. Are there any considerations I should put into the contract? If it's before you bring it to me to work for you, we can chat all day, baby.
Yep.
Right. But it's torture once you bring it to me and it's already locked up and the terms are locked in. And I'm like, I wish they would have just done it this way. So that's part of the title company thing. But the different deal types and methods, I like wraps. I like contract for deed. I like lease option. Most of the people I work with, investor buyers, don't want to buy on a lease option, but they would happily sell on a lease with an option of purchase. And so entry strategy versus exit strategy. And if there's any wholesalers watching, I'm talking to you right now. You have to plan your exit as you structure the entry. It's like a car coming into a turn too fast. You're going to go off the exit. Like, you need to enter at the right speed with the right terms and conditions so that your buyer downstream can do what they want with it. So if your seller is demanding a 3-year balloon, most investor buyers are going to say, I can't do that, especially if their plan is to buy it and then sell it on a wraparound mortgage to an owner-occupant family, and they can't pass a balloon to those people. You have to know what those things are downstream so that you can make sure you structure and negotiate correctly at stage 1. so that you can get through that whole thing.
Right. I guess why don't you expand on the whole balloon thing on a wraparound mortgage?
Sure. Yeah. Owner occupant loans. Like, okay, home ownership is the American dream. Just think of it that way. And courts and legislators and laws are designed to protect the consumer. You and me, anybody watching this is probably considered a business in a real estate transaction. So you have a business versus a consumer. Courts favor consumers. When it comes to a balloon, there are both state and federal laws that restrict when you make a loan, you become a lender and you become subject to lending guidelines. And so you can't put a balloon at least less than 5 years, but generally you just shouldn't on an owner occupant buyer.
Which is why I prefer the lease options on that exit strategy,
Mhm.
because you can put an end date on their option.
Yes.
And if they can't get their financing, then their option expires. So
Right.
that is one pro to doing it
Yep.
that way.
So you
Okay.
do have more flexibility on that.
So wraparound mortgages, if you were buying something sub two and then selling it on a wraparound mortgage, how do you structure that to prevent due on sale clause on
Yeah.
the underlying sub two?
Oh yeah, I didn't tell you I fixed due on sale. We're like 3 dozen plus at this point of due on sales fixed, and we haven't had one fail yet. And by the way, to me, a failure is that if you have to sell, refinance, or let the property go to foreclosure. All three of those are a failure mode to me as far as fixing due on sale.
Or pay off?
Yes. Okay. So sell, refinance, pay off. All right. Yeah. If you have to do if you don't get to continue owning with the loan in place, that's a failure in my book.
Mhm.
How about that?
Yes.
Controlling may be the better word than owning, by the way. Basically, we'll restructure the transaction so you still have the same effect. What was the question before that though? Oh,
Okay, so
structuring wraps, sub
yeah.
twos. A sub two. I think I'm going to make a rule of thumb. All sub twos should be closed as wraps because all right, I got to go back to foundational stuff. A
Mhm.
bank gives you money, you give them a mortgage. So everybody says, "Oh, my mortgage." Yeah, well, you gave the bank a mortgage. A mortgage is the right to foreclose on you if as the borrower if you don't pay or honor the other terms. So when you think of it that way from a seller, the seller is now my bank. Even if it's got a sub two loan, they're going to wrap that sub two loan up in their own financing package that matches the terms exactly. I'm giving them a mortgage or deed of trust. They're forwarding me the financing. And so basically I'm saying, "Hey, if I don't honor the terms here, you can foreclose on me." That's
Mhm.
the ethical way to do it. If you default on payments, they should be able to foreclose on you. So ideally, A to B is a wraparound mortgage acquisition of that sub two, the house with the sub two loan, and then the downstream sale is another wraparound. So you can have like a third position wrap going on here. Due on sale comes about when banks, if they notice and if they care. Usually they don't. And even then, usually they don't.
Mhm.
Um, some people are using trusts. I'm a fan of trusts. If you don't understand them, I'm anti trusts. You need to understand the tools that you're using. So buy it in your personal name, buy it in an LLC, buy it in a trust. I really don't care. They all work. The rate of due on sale is incredibly low for the number of loans that are out there that are sub two. And I've been able to fix every single one that's come up. My team does charge a fee for that. But so reducing the risk of due on sale, though, Garn St. Germain protects for self transfers and transfers to direct descendants and heirs and things like that. So estate planning. So that's where the trust comes in. If you make it look like a protected transfer, it doesn't mean it is, but it's less likely to attract negative attention. So that's why people are having seller transfer a property into a trust and then sell them the beneficial interest. Matter of fact, you can actually dodge some transfer taxes because a self transfer is a non taxable transfer in a given state. Not all states are the same. And so you avoid transfer tax by transferring it to yourself inside of a trust first and then selling your beneficial interest. And so that's one way to reduce closing costs.
Okay, so let's touch on that. And
So many
again,
things.
we're not giving any tax advice or legal advice again, but I have opinions and so does Caleb.
Yeah.
If you have the seller transfer it into a trust and then you buy the beneficial interest of the trust, you are not, in my opinion, going to be able to get the basis of the new price of what you actually bought it for, right? You're taking over the basis, the cost basis from the seller. So if they bought the house for 100 grand and it's now worth 200,000 and they bought it for 100, but then they refinanced it at 190. Okay.
Yeah.
Their basis is still $100,000. It doesn't matter what the debt is. So if you have them transferred into a trust and by the beneficial interest of the trust, they're carrying their $100,000 basis through to you. So when you go to resell the property in the future, you're going to pay capital gains on that original basis, in my opinion.
I would debate that a little bit. I think there's when I'm going to use an analogy, a comparative analogy, like your basis is what you buy something for, even if you're buying interest in an LLC. So buying the interest, the beneficial interest of a trust, if the trust only owns the asset for the purpose of holding title, then you have effectively bought, as far as the IRS is concerned, you bought the asset.
You bought the asset, which is the trust. And when you're buying the beneficial interest, you're actually buying personal property, not real estate. Because the
As
real
long as the
estate,
trust defines the beneficial interest as personal property. Some of them don't, but in order to dodge the transfer taxes, you have to declare it beneficial interest, which
right.
also doesn't work in Washington, D.C. They actually specifically have a law or a regulation that says that you can't dodge real estate transfer taxes by declaring it beneficial interest or personal
Shocker.
property.
It's DC. So, regardless of how you choose to do it, my preference is I actually have the seller sell it to a newly formed trust that
Sure.
I formed. And so it is a transfer, but to your point, it doesn't look any different to the lender because they don't know who the beneficiary is, and they have no
Right.
right to know who the beneficiary is. They only see a trustee. Um, but
But I have seen a bank accelerate for a transfer into a trust. It has happened more than once.
mhm,
And then the burden of proof comes back to you to prove because it is an apparent violation of their due on sale clause. So they can send an acceleration notice and then you just have to prove satisfactory evidence that this is an exempt transfer, which an investor purchase is not.
correct. But there are other ways, which we're not going to go into now because this will be a 3 hour show, of reverting that beneficial
Yeah.
interest back to the seller only after having other contracts in place to still give you control.
Yeah.
Um, but so I love the trust thing that you said. You need to know what you're using. Don't go and pull some trust documents off of Google and say, "Oh, this is how I'm buying my property sub two," and you have no clue what your trust laws are in your state or what the documents you actually used are.
Yeah.
Like in the state of Wisconsin, they don't recognize land trusts. Okay. Every attorney I've ever talked to said, "No, we don't do those here." Okay, great. I take the exact same trust documents and I change the wording at the top from land trust to title holding trust. And they're like, "Oh yeah, we do that all day long." It's the same damn document.
Yeah,
So
that's the attorneys not being solution oriented.
correct.
Like that's what I train my team, my employees. I'm like, listen, you're going to have a task list for any of the various things we do. I want you to be outcomes oriented, not task oriented. The outcomes, the necessary outcomes will change your task list, and you need to be able to change that on the fly because I don't care if you checked all the boxes. If the customer didn't get the result that they signed up for in the first place, we have failed.
So if I come to you, sub two transaction, we started talking about wraps, but now we're just going to go. I come to you, sub two transaction.
Mhm.
My end game doesn't matter. Um, as a title company, are you number one? I assume you're not going to contact the lender for a payoff because there is not a payoff.
Heck no.
Okay, that's where most title companies screw this up right from the jump.
On day zero. Yeah.
Yep.
What we do is we make sure the parties agreed. If you guys want a payoff statement, we'll order one. But what we do is we ask for the most recent mortgage statement and have everybody agree that the balance on the mortgage statement, unless otherwise directed, is the balance of the loan.
Yep. Perfect. I love that. Title insurance. What do you
Yeah.
do with title insurance in a sub two transaction?
We close and insure it. We add the existing loan as an exception, which means if you get due on sale and that's the claim that causes a problem for you, we're not going to pay out for that. You signed up understanding that there is a due on sale clause and that the lender has the right to accelerate the loan. So otherwise, regular full title insurance.
In the title insurance that was issued when they bought the property and took out that original loan, that is invalid once the deed transfers, correct?
Yeah.
Yep. Okay.
And
And I want
then
to make that clear for people.
yeah, the one of the tricks though is putting it in a contract for deed, selling it via contract for deed. So if I buy it via contract for deed, I've only bought equitable interest, not legal
Mhm.
or equitable title, not legal title. A deed is a physical thing, can be a digital file. Title is a legal concept. A deed conveys title. So if you deed the property to me, then I have both legal and equitable title. But if you give me a contract for deed, you have conveyed equitable title, which is the benefit, use, control of the asset, but you have retained legal title. And in that case, title transfer has not occurred. And generally, we don't do title insurance for that.
Right. So I will tell you, I have bought some properties sub two without getting a new title insurance policy, which was
Yeah.
a calculated
Yep.
decision. And it's going to vary very much on how long they've had the property. Is there any kind of nasty stuff coming up? Meaning, are they getting divorced, going into bankruptcy, anything like that that's going to call any kind of title into question?
I operate on the same logic as a buyer. I don't want to stand up here and say I don't recommend title insurance because generally, if you don't understand, you should just buy the insurance, I think.
Yeah.
That said, if you fully understand the risks or the costs are really low and there's no turbulence related to the deal or its ownership, death, divorce, potential, like somebody having been living in there for 3 to 5 years already, not on title, not married, they can claim common law marriage after the fact. So, like, those are the sorts of things where it's like, listen, we're going to get insurance for this because somebody could make a claim that it would be very expensive for me to litigate.
Yes, very much so. So, okay, I love that as far as title company is concerned. Um, Wraparound mortgages, that's pretty cut and dried as far as title work, right?
Yeah.
Okay. What else do you see from the title side on a creative deal structure that comes in that's kind of red flags for you?
So our standard, I was just talking with my team about this. There are most of the court cases and things where a title company is involved are going to be business versus consumer. And the title company is a licensed agency, insurance agency who is in basically the best position to do the most good for the general public. And so if then it becomes my duty and negligence if I don't do it to bring the best practice controls into play, which I think a lot of title companies are not doing just because they don't understand the depth of these transactions. For example, today I said to my team, we need to make sure the buyer on a sub 2 transaction has an insurance policy at closing because once the seller transfers title, their insurance policy is effectively void. I've talked to multiple insurance agents. They're like, we will not honor a claim after you've sold the property. Period. End of story. And most investor buyers that I experience are not buying new homeowners insurance policy or landlord policy or whatever until maybe after closing. And I'm like, you can't just swap your name on the existing policy because that's not who holds title. And so I said, the standard now, we will not close the transaction unless there is an active insurance policy for the property that names the buyer as an insured. I don't care if they're primary, secondary, whatever. We'll figure that out. They need to be named as an insured, and the seller needs to be named as a mortgagee so that they're notified if the policy is canceled. Those unsophisticated sellers, the consumers, they don't know to require evidence of insurance prior to closing.
Right.
Institutional lenders do every single time.
Mhm.
And so this is almost a debate internally. And I'm like, this is not up for debate. It is the standard.
Yeah, it's
You have to make sure
non-negotiable.
it's there.
Yes.
Yeah. Because
And
we're in the best position. Therefore, it's our ethical and probably legal at this point duty to set that up. And that's the sort of thing, like, I require the seller to understand the transaction that they're in. Usually a baseline sub 2 disclosure about the due on sale clause, your credit's still tied to this loan, it's not being paid off at closing, et cetera. But also a plain language understanding. Like, if we're on the phone and you sound like you're under duress, you don't want to do the deal, or you don't understand what's actually happening, we'll have a conversation with the other side. And if they can't get everybody on the same page, we're going to pull out.
yeah. No, and what I loved what you said about the insurance is so many people are learning the wrong way or being taught the wrong way and just keeping that existing insurance policy in place. It will not cover if there's a claim. The deed transfer, that insurance company is going to love it because they're going to keep collecting their money, but
Yeah.
they're not going to have to pay that claim.
And then I get the buyers or investors are like, well, but insurance will notify the bank of the transfer. And then I might get due on sale. Then don't do the deal, you chicken.
Yeah.
Understand the risks and do it the right way, or get out. If you can't handle the heat, get out of the kitchen.
And
That's the deal.
There are proper ways to put that insurance in place that shows the bank that it happened, but
You
that
reduce
doesn't
risk, but you can't eliminate it.
trip it up. Right. Exactly. Okay, I love that. Here is a question for you. I don't know if you've ever come across this, and this is the way I do it, and this is pertaining to options. Okay, so
Okay.
when you get an option to purchase somebody's property, what do most people do? If I had an option to buy your house, Caleb, what do most people do with that option?
A lot of people are selling the option, are they not?
I mean,
I don't know where you're going with this. I mean, they'll hold
in
it. They might record it on public record or a notice of
recording,
it.
right?
Okay.
Recording it. Okay. So, and I've never asked somebody that had a title company this question. This is why I want to go down this path.
Oh, okay.
So most people would record their option, right? Clouds title and secures your position, whatever position you're in,
Yeah.
second, third position. Please don't get options without doing title searches. Like, oh my God, people do that. And then they find out they're behind 18 other liens. Not good.
Yeah. Hey, I've got like $5 usually same day turnaround preliminary title searches. Boom.
Yeah.
You know?
So most people record the option. Okay. Now, what happens, Caleb? I have the right to buy your house. You decide to sell it to Joe. Okay. Unbeknownst to me, and somehow that gets closed, gets through title, the option gets missed. What is my recourse as the person that held the option against you and the person that you sold it to and the title company that actually missed it? What's your recourse?
Got it.
I'm sorry, what's my recourse?
Your recourse, the optionee, right?
Mm-hmm.
Yeah. You're the optionee. You have the right to buy.
Yep.
If it was recorded of record and the title company missed it, then you can put forth a claim, basically bring a lawsuit, and the title insurance should be kicking in there. It'll go down. This is more like an underwriter's attorney type of question, but
Yep.
you would probably
Well,
get some sort of monetary damages or judgment and not possession of the house. Sorry, once somebody moves into a house, courts just don't award the house to the next person. They have to figure out what the price is, put a price tag on it, and you get a payday.
perfect. Okay, so I'm either going to be able to collect after probably a lengthy lawsuit. I'm going to be able to collect against title insurance and or get a lien. I'm sorry, a judgment against you as the seller. But that doesn't necessarily mean I get paid, right? I have a judgment, doesn't mean I get paid. And I'm
Yeah,
never
if
going to get possession of the house.
you're probably never going to get possession of the house, unless it's vacant, right? If nobody took possession or occupancy of it, then they may flip the sale, pay out damages for reversals, and unwind it. But if once somebody moves in, that's probably not happening. That said, if the buyer got title insurance, you would be paid because it's from a title insurance company that insured the transfer. If they didn't buy it with title insurance, then you would get a judgment against one of the parties who then, yeah, you'd have a judgment that may never get paid out of pocket or
Right.
may never land in your pocket.
Okay. So here is what I do. I secure my options with a mortgage. So you, Caleb, would pledge a mortgage,
Yeah.
securing our option. I don't record the option. I record the mortgage, securing the option.
Mm-hmm.
Now, same scenario. You go and sell it to somebody else, and somehow my recorded mortgage gets missed, which is rare, I know. What's my recourse at that point?
You would foreclose.
I would foreclose. Thereby, I will.
Basically, it's a due on sale clause.
Right. But I will get the house. I don't want a judgment.
Not necessarily. A
I
foreclosure.
If I foreclose against the property, because the property was the collateral for the option.
Right.
I foreclose against you. I'm going to take the house. You and your seller are going to end up in a court battle against each other and or the title company.
I think not. I think it's not going to get to that point. You're still not going to get the house. I mean, a foreclosure is to put something at auction, and if it goes for the price that satisfies all the liens, then people get their payoffs, and somebody else bought it because they paid the bid amount. You could end up with possession if nobody pays the amount that's due.
Correct. And that's getting into the weeds. The reason I bring that up is, again, because you have, go ahead, Caleb.
But again, if the buyer bought with title insurance and the title company missed your mortgage, they would just pay out your mortgage, which your mortgage or fee amount would be nominal compared to the entire purchase price of the house, right? They would pay the $10,000, $50,000 in damages and just be done, right? Pay you off. in order to get title clear to the point that it was insured to in the first place. So a title insurance policy would probably still just pay you, not get you the house. And then shoot, I forgot the second thing.
I'm sure it was fantastic, but
It was just everybody give me credit for it. It was great.
the reason that I prefer to do it this way, and the reason I was taught to do it this way years ago, was I'm never going to end up foreclosing against somebody in 99.9% of these circumstances. But it's not that you as a seller would by choice go sell to somebody else. It's most of the time it's if you passed away and my option is still in effect and the heirs don't want to sell because maybe the property went up significantly in value and they don't want to honor my option, right? They want to sell to somebody else for more money. So 99.9% of the time, the option, if it was recorded, or the mortgage, if it was recorded, is going to get caught or found in the search. And now they have to come back to me and say, what is it going to take to make you go away? Right? Just the threat of foreclosure is enough in 99.9% of these cases as well.
Yeah.
But that's why I choose to, have you secure the deal with a mortgage. And
How do you set the monetary value on that?
I set the monetary value at the strike price, my buy price of the property, of my option. So if I had the option to buy your house for $200,000, the mortgage states that the value is $200,000. Now, just everybody be aware, every state has different foreclosure laws. I'm not telling you what you should do or shouldn't do. I know my laws in the state of Wisconsin. I also owned a lending company for 10 years, had to foreclose against enough people. We've been down this path. So this is more just so you know there's another way, right? Like Caleb and I aren't giving you legal advice. We say that a lot in this show. But
You gotta.
But the other reason that I love having that mortgage in place is if I don't want to actually ever take possession of the property, I want to sell that option. If somebody that I'm going to sell that option to is using FHA financing,
Yeah.
where there's still seasoning of title requirements,
Yeah.
I show up on the HUD as a mortgage payoff.
Yep.
So it does not trip up any kind of underwriting. And that's
Can I tell you something special?
Absolutely.
I was just working on a document kit for wholesalers, basically how to do novations. And a novation, for those who don't know, is when you basically swap out who the buyer is. So I go under contract A to B, and then I have the right to choose to select an alternate buyer, and they pay me for the privilege of taking over. It's wholesaling, but it's not an assignment fee. It's more paperwork to do the same net effect, but what I'm doing in my doc kit right now is converting that to be a lien placed upon the property that it automatically expires in like 45 days or something like that, so that party B shows up as a lien payoff and not a transfer of interest.
Correct. And that's the same thing. Basically, an option can be used the same way as a novation, just different paperwork.
Yep. Dude, there's so many different ways to accomplish just about the same thing. And that's why that's why I can fix due on sale, because I can restructure your transaction 7 ways from Sunday. So let's just get it solved. Let's do what the bank requires and get them to shut up, and then we'll just fix it on the other side.
Absolutely. So here's probably the final question. What is one question I should have asked you that I did not, and it can be about anything? And the dead air is Caleb thinking if you're not watching the video.
That is. Nothing comes to mind. I think we had a good flow here. We bounced on some good topics, and I think you and I are on the same wavelength, pretty aligned in thought here. I like it. I don't think there's anything. I'm going to say,
I think after we get done recording, we may stay and talk for a while.
Yeah.
Well, Caleb, I do appreciate you coming on the show. How can people find out about you or find you?
Well, I own creativetitle.io and creativetc.io. Those are the two companies. TC is consulting. Creative Title is in Colorado, Tennessee, and maybe one more state next month, but that's under NDA.
Perfect. Well, thank you so much for your time. And this went really fast. But for
Time flew, dude.
those of you listening, you know, the whole point of this show is to bring people on like Caleb and tweak your thinking a little bit. So go out there and get some deals, find people that are doing it right. Come to me, come to Caleb, come to people that you want to learn from, and go out and do deals. There's always a way, and creative is so much fun. So until the next show, go out, live your vision, and love your life. See ya.